exactly.
Same here.
So it's currently live. You should be able to see it if you go to my page. I'm not sure. And I'm going to.
I'm looking for me some entrepreneurs.
Oh, that's the wrong one. Okay, the one. You heard my rap.
Oh, that's the wrong one.
Now keep in mind, it's recording everything we say right now. This is going to go to YouTube, so be mindful. Okay. All right. Oh, look. This one's not the rap, so don't worry about me. My hideous. Let me put these glasses over here because I'm going to be looking for them tomorrow. Oh, there he is. That's Adam. There you go, Itson.
What's going on, guys?
How are you?
How are you?
I'm wonderful, wonderful. Just I got something playing in the background. I'm trying to kill it, but I can't find that window. So,
You have what?
Oh, I had another stream playing in the background, and I couldn't find the window, but I think it's gone now.
Okay. So let me put on my comments. I normally will have my Facebook up so I can see who's in there. But because if they don't comment, I won't see. But of course, you guys can see as well. So we are currently live. Let me
Hello,
go
everybody.
I always get text messages right when this
Right.
happens.
I'm like, hold on, wait. What's going on?
I don't know why people are texting.
I always get text messages
right. You see the echo?
Yeah.
Okay, you guys. So far, we have about 6 viewers. Make sure you like, comment, share. You guys that are currently on here, I'm going to put it on here. Like, comment, and share. Make sure you share this post. Share. We're going to have a raffle at the end of the month. The person that had the most likes, shares, and comments, they're going to win a $25 gift certificate to it's not popular. Walmart.
Okay.
Okay.
So, let's get started. I have a special PowerPoint for you guys, but if you guys already know what we're talking about today. So for our listeners, I'm going to share my screen. Give me a second. Booyah. Technology. Can you see me, guys?
Yep.
We good to go? Okay. Turn my music down. That's my little. There we go. All right. Today we're going to discuss. Well, let me say that again. For the month of January, we're going to discuss tax benefits for homeowners. Well, the tax benefits, home ownership. I'm sorry.
Woohoo!
All my homeowners out there.
Yeah.
You like homeowners.
But for the month of January, we're catering to our homeowners. We're talking about the moolah. And since we're talking about moolah, we're going to have a special guest on here. Quite a few special guests. We have several realtors that are realtors with experience, has worked with homeowners. But most importantly is our money man. That's what I'm calling them. So I'm going to make sure we introduce everyone. But so far, I want you to go ahead, like, comment, and share. We will keep track of all the comments. So make sure you type it in the box if you have any particular questions, comments, or concerns. Let me go ahead and get started, you guys.
Yes.
Ready we have on here with us. All right. We got anybody famous?
We all famous.
Right.
We all famous. How come y'all so low?
I got my mic all the way up.
Okay, there we go. All right, Fairbanks. Can you tell us what our takeaways are going to be for this month?
All right, so our takeaways for this month are, as you can see, our bullets. Owning a home will often be the most expensive and important purchase that you will make in your lifetime. To encourage ownership, the IRS, the tax and deductions, right, has provided several tax breaks for owning a home. And then lastly, the credits that you will get or may receive will help you get certain home improvements, such as using clean energy, or qualify for help those qualify for first-time home buyers. So those are the 3 things that we are taking away for this month.
Let me tap into that first one.
Okay, go ahead.
I know people say it's the most expensive purchase, and I agree with that. But I think in this era, we have a lot of millennials that are already millionaires, and they're purchasing cars that are worth more than the homes that I've ever purchased.
Right.
So that traditional statement, we're probably going to start changing eventually, because for some, and I know some personally where they've purchased $300,000-$400,000. Now, me, no, but they purchased cars and their home. Yeah, so I'm a little different. I'm very frugal, but that is in a shall I say an old school perspective. It is generally the most expensive purchase that anyone will make. So I just wanted to clarify that, because I know I told someone that before and they checked me. Oh no,
which makes sense.
And I will tell her, well, baby, something's backwards if your car costs more than your appreciated asset.
Because are you living in your car? But that's a totally different subject. We have a comment over here real quick. Can't see the person like and share tickers is covering Edson's face, so we can't see Edson.
Gotcha. Appreciate that. Let me turn it off.
Thank you, Kiara. Yeah, do another one because it's the same. Nope. You might have to take it off.
I'm trying to find it. Hide. There it is.
There
it is.
Oh, hey,
Thank you, Sarah. Sarah must think you cute, Edson.
Don't start nothing, okay?
You can just think it. That's it. Because I know you're happily married, so we're gonna leave that at that. And that's a good introduction, so everyone can know who Edson is. So Edson is a CPA and a business financial strategist. Can you tell us a little bit about yourself, Edson? And for those that may not know, can you clarify on what a CPA is?
Certainly, and I appreciate you guys having me tonight. Thank you, Capri, and for everybody else that's joining. Welcome to tonight's quick discussion. Just a little bit about me. Went to school, studied accounting, came out in about 2 or 3 years, started to work for one of the big 5 companies in accounting, got my CPA certificate. God
dog it. Come on, there we go.
Got my CPA certificate since 2002, and I've been a CPA ever since. So that's almost 20 years now. CPA stands for Certified Public Accountant. Public Accountant, and all that simply means that there are certain services, certain financial services that are being performed that has to be signed off by a CPA. And once again, there's a code of ethics that goes along with our profession, and so that's one of the reasons why when you get that stamp of approval, it means a whole lot more than somebody else doing that type of work. There's several different procedures and processes that we have to go through and document in order for us to deliver certain things to you, like financials or reports. And at the end of the day, our financial system would not be what it is if you didn't have trusted people at the helm doing those reviews. When you look at companies like Amazon, FedEx, and Coke, if you don't have people at the helm that are ethical to review those reports, when you invest your money in public companies, you don't want those public companies to go under. Otherwise, you're going to be losing your money. Just like we had with the Enron scandal down in 2000, and a lot of things that happened in 2008. So I'm happy to be here. I want to definitely add some value to you guys, and would love to talk about your comments and questions that you might have regarding home ownership. Just a quick tidbit about what I'm doing currently. I run my own firm. It's called Edson Richards and Associates. Most of my clients are realtors, and so I come across people looking to buy homes very, very often, and would love to kind of assist any one of you on what you're looking to do going forward, now and into the future.
Awesome.
Edson, you know my grandfather's name, which my mother's maiden name is Richards.
Oh, really?
That's not a common name.
Well, here's what I tell you: it's certainly not African.
Oh no, they're from Alabama.
So you know how we got that name. I mean, that's more of a British name, and just a little plug. I'm originally from the Caribbean, so having a name that's Richards, obviously somewhere beyond my great grandfather, how we got our names, and so it's been a blessing to be who I am. My first name was actually given to me by my mom, Edson, and it's named after the great South American football player Pele, because that's his name. And I've only met probably one person in my life that actually had that name and actually grew up with that person. So
you're the only Edson that I know.
Yeah.
I can
I'm goofing around tonight.
I definitely concur with that last name because you can tell by my hair texture that the roots go there.
Exactly.
We're gonna leave it at that.
But, we represent it well. I'm not looking to. I know a lot of people want to change their name and do a lot of stuff. You know what? Hey, we are who we are. Yep. We all got here for whatever reason, and now we just got to make sure that we be great citizens and not become what we see today.
Exactly.
But that's a whole sidebar.
That's just on a TV back there right now. All right, let's welcome Melanie Marie. That name sounds sexy.
Hey, thank you.
Melanie Marie is a realtor here in the Dallas-Fort Worth area. And as you can see, she represents residential and commercial clients. You want to tell us a little bit about yourself, Melanie?
Yes. So I am aka Melanie Marie, aka the real estate junkie. I am a mom of 2 beautiful babies. Of course, I'm with Monument Realty. Have a couple other things that I do, trucking and cleaning business and all that great stuff. But I'm kind of like a one-stop shop, and I'm like the plug of real estate, I shall say.
I like that. Melanie is actually on my team. We work closely together, so we have some amazing things that we're bringing to the DFW area. So watch out there, Di.
Yes, and I have to give thanks to Capri because you guys, everyone who is watching this live, this lady right here has so much knowledge and she loves to give it. So anyone that's out there that's looking to become an agent or just looking to buy homes, all of us on here are realtors and of course a CPA, but this lady right here brings so much value. So if you don't know her, you need to get to know her.
Definitely. Now that's some advice you can bank on. All right, we got one more. The bald and bold. Tonia Fairbanks. She's licensed in the state of Oklahoma and Texas, and she's been a realtor for several years now. She concentrates in residential sales, and she was on my team before she relocated to Oklahoma. I know. That was my road dog.
Oh, gosh. Okay.
So you can tell us a little bit about yourself.
Hi, everyone. My name is Tonia Fairbanks, obviously, and you can see I am your bald and bold realtor. I don't know really much to say. Like, I went to Spelman. Okay, I'll say that. And while there, I got my degree in Spanish, and then I came home to Oklahoma City and went to UCO, University of Central Oklahoma, and got my master's degree in bilingual education. So that means that I can actually service my Latino brothers and sisters, or Latinx, whatever you want to refer to them as, in their home buying process or their selling process, as well as, everybody else. So I know there are a lot of people that are like, man, I can't service people that don't speak English. I got you.
And an African-American bilingual realtor is like unheard of.
That's good.
Right.
Hey. I know the people, you know what I'm saying?
You DFW and Oklahoma, correct?
Yes, ma'am. DFW and Oklahoma City, just Oklahoma, period. And to like piggyback off of what Melanie Marie said, Capri, like, man, is a fountain of information.
They gonna make me cry.
Yeah, we got it. She's a fountain of information. She pours into other people. Like, you wouldn't see us here if it weren't for her and her pouring into us and allowing us to, come onto her platform and to talk to other people about our experiences and the things that we're doing and how we can help others get into the homes that they need to get into or want to get into.
And in 2021, we got some amazing topics too. Go ahead.
Yeah.
Okay. You don't find that too often in many realtors. A lot of really good realtors, don't want to share their information or just simply don't want to share the information.
That's why my slogan is advice you can bank on, because I'm going to back it just like the Federal Reserve backed the banking institutions. All right, that's a good plug. Now we're going to slide right on in and talk about the money.
Right on in the money, yep.
All right, so today, Edson, we're going to leave it. We're going to have you're going to be the man today. So we're going to talk about tax credits versus tax deductions when it comes to home ownership. So the first thing we're going to talk about are tax deductions. We're going to give you guys a little bit today because remember, the month of January is about the entire tax benefits. So we're going to give you a few examples, but next week we're going to give you a plethora of deductions or type of deductions. So Melanie, would you like to read it, or you guys want me just to do our talking?
I don't mind, but I do want to say, after January, all those people who have bought homes and you filing your taxes, you shouldn't be inboxing no questions because we're giving it to you now. So if you know somebody who knows somebody who knows somebody, tell them, like, share, follow, and go back and revert to this video if they're not on it now.
Exactly.
So, with that being said, tax deductions versus credit. Oh, Capri, you and these small words. No, I'm blind.
I got it. You want me to do it?
A tax deduction reduces your adjusted gross income, which in turn reduces the tax liability. Mortgage interest, most common.
So can you go a little bit more in detail in reference to that? I just used the mortgage interest because that's the first one a lot of people really refer to. And I guess, can you tell them exactly how would that work if you were actually filing a homeowner's taxes when they own a home? What does it entail?
Sure thing. So first thing to just share with people is that, most times if you're looking to buy a home, you're going to need to have your taxes in order, which means you should have filed your tax return for the last 2 years, because that's how they're going to verify your income so that you can qualify for a home. I know a lot of people that are sitting out there that hadn't filed for 2 years, 3 years. I've done situations where I have clients that they're getting ready to buy a home and now they need like 5 years worth of tax returns or 6 years worth of tax returns that need to be done. Yeah, there are things like that out there. Now, as it relates to a deduction versus a credit, both of those both of those items, the deduction and the credit, reduces how much tax you pay. However, a credit is the most powerful when it comes to that type of reduction. So to give you an example, like she showed on the screen, there is a possibility of you being able to deduct your mortgage interest after you've closed on a loan. So I'm going to use some very simple numbers so that we could get easy math here. So let's just say you're out there and you're making $100,000 a year after your expenses. And let's just say you're in the 20% tax bracket. And because you're in the 20% tax bracket, you went out, you bought this nice home. And because you bought that nice home, let's just say your interest for that year, you paid about $10,000 in interest. Now, if you're able to itemize and fully take that $10,000 in interest, then what would happen is your taxable income would go from 100,000 down to 90,000, which means if you took that 20% tax rate times that $10,000, that mortgage interest would actually save you $2,000. If you go $10,000 times 20%, you'd actually save $2,000 in taxes. So if you were to file your tax return and not claim that deduction, you would pay 20,000 times 100%, which means you'd actually pay $20,000 in interest versus the 18,000. Hopefully that makes a lot of sense.
Whoa.
Now with the credit.
Want me to go to the credit next? Here you go.
Yeah. So with a credit is an amount that goes directly against your taxes. So it says credits represent money taken off of your tax bill. Think of them as coupons. If you get a $500 tax credit, you will go down by your tax due will go down by $500. So in my previous example, what would happen is instead of the $10,000 being deducted from the $100,000 before we calculate the tax, your tax would be first calculated. And once your taxes is calculated, if you're getting a credit, you can get a credit of let's say $2,000 that would go against how much taxes you owe. So for example, if after you calculate your tax, you owe, let's just say $20,000 and you have a first time home buyer credit, for example, that's $5,000, your taxes due are now $15,000 versus the full $20,000. So a credit is more powerful than a deduction. And the way to understand credit, I don't want to make this too complicated, is the IRS / the government creates a series of incentives to drive your behavior. So for example, you get tax credits if you put solar panels on your home.
Gotcha.
And
That's
so
like this down.
they're trying to drive your behavior to make you put solar panels on your home. And so instead of the IRS sending you a check to do that, it's easier for them to do that on your tax return. It's almost like a subsidy. They're subsidizing your buying an electric vehicle. They're subsidizing your buying a solar panel roof, because that's better for the environment. And they're trying to get you to do things that's better for the environment. And so they put the incentive where it matters. And that's what a credit is. It goes right against your tax bill.
Oh, okay. I heard you say standardized deduction and itemization. Can you let them know the difference between those two so they'll know which one they should do?
Right.
Yes. So real simple. And let's just say you're dealing with a couple that's married filing jointly. Okay. Currently, the standard deduction is about $24,000 for easy math. You get a choice of taking the standard deduction or the itemized deduction on your tax return. So whichever is larger is what you're going to go with. Now, there are several items that the standard deduction is just, it's a flat bracket or amount, whereas the itemized deduction is made up of your home mortgage interest, your real estate taxes, some of your premiums that you pay as it relates to your home. But then your charitable giving is also in your itemized deduction bucket, as well as things like health, like a healthcare, that once it reaches a certain limit, you can actually deduct some of those expenses. Now, because of the Tax Cut and Jobs Act, they doubled the standard deduction from $12,000 to $24,000. So now it's harder to itemize to take advantage of that home mortgage interest. And so you might want to talk to your CPA about, okay, if you can't take the itemized deduction, how else can I get some more deductions for my home? One of the things that you can do, you can get yourself a home office. If you have a home office like I do, you get to deduct a percentage of your security, electric bill, telephone, everything that runs through your home. You get a percentage of that you can write off by having a home office. And we can talk more about that if you guys need to. I
have a question.
Sure.
Is there ever a point where it's like you gave an example of maybe your mortgage interest being $10,000? Is there ever a point where I can just write off that full $10,000?
That's a good question.
Well, once again, if you get to, let's go look at as an example. So married filing jointly, if you have a chance to take $24,000 in tax deduction, and let's just say your mortgage interest this year is $10,000. Your real estate taxes is $10,000, and your charitable giving is $30,000. Okay, so all total, your itemized deduction is $30,000 versus $24,000. So the only benefit you get is that additional $6,000.
Okay.
Because you would have gotten $24,000 no matter what. So the power of the itemized deduction really kind of decreased a little bit because they doubled it and they took away the standard, the personal exemptions that we used to get. You remember when people used to claim all those kids?
Yeah.
And all those family and friends?
Right.
You can't claim Ray Ray anymore. You can't claim all those people down the street, so to speak, because they've gotten away from the personal exemption.
Is there a maximum number of kids you can claim?
No, I mean, if you have 5 kids, 6 kids, and they're below the age that's accepted by the IRS, you can claim those. You can get, I'm blanking on the term right now, but you can get a credit for your kids up to $2,000, and that's a refundable credit. One of the things I want to talk about is there are credits that are refundable and credits that are non-refundable. So if you have a non-refundable credit, if your tax bill is already zero, you don't get that $2,000 sent to you. But if it's a refundable credit, even if you don't have a tax bill, they will still send that credit to you as a refund.
So the education credit refundable, or are there 2 of them? 2 education credits?
I mean, the education credits, it's a little bit complicated. Let's just say this. There are a couple of credits out there. And then if you also have like student loans, you can also get a deduction for your student loan interest that you pay.
I do every year.
Yeah. So you just got to talk to your or anyone else that you're dealing with and ask them about that and make sure that you're strategically planning ahead so you get the best bang for your buck.
Okay.
Because
So-
everybody's situation is different.
Go ahead, Melanie.
I was gonna say you just gave away 3 things that we can write off: student loans, the interest on the home, and then office.
Yeah.
Home office, real estate taxes, and once again, you know, as a employee, you're very limited to most of those deductions that I'm talking about here.
Exactly.
What's great about our environment today is I think everybody needs to have another business. And once again, that's just something that I promote, I preach, because once you get into business, the incentives are there for you to do certain things to get these tax benefits. Because I can tell you this, you're not going to change the American system. It's a capitalistic system. It's designed a certain way. And if you complain, all you get is tears. But if you align yourself, you get the benefits that are available to you. And once again, that's our government want you to have things that put houses on land, jobs made available to people that are looking for work. And so the taxes are geared that way to drive that type of behavior. So if you get into real estate, there are a lot of real estate deductions. You know, if you get into a small business and you're a minority, there are deductions because you're a minority. Okay. So you got to find your lane and find what you're comfortable with, but you got to get into some type of lane to get that benefit.
And that's how we came up with the Wealth Wednesdays. The Wealth Wednesdays encompasses home ownership, financial literacy, and the advice you can bank on stemmed from me promoting entrepreneurship. And that's why I have called Capri for the LLC. And last year, my focus was on the benefits of being incorporated and the tax breaks that we get that we cannot get, like you said, as a W-2 employee. So everything you said basically summarized what we talked about last year, which is perfect because going into the new year, you put a stamp of approval on it. So,
hey, I mean, one story is coming to mind right now. I don't know if you know the lady. I forgot her name. She's in Atlanta. She runs this burger joint called Slutty Vegan.
Yes, I've heard.
And now she's getting ready to put like 8 new stores all across the country during a pandemic. And, you know, it's just surprising how, you know, a lot of people are thriving. And once again, follow your heart, follow your conscience, get with somebody that can really guide you. But there's a lot of opportunities out there today for you to get in business and lower your taxes. That might sound counterintuitive, but you can really get in business to make a profit and in turn lower your taxes.
Right.
And go ahead.
Oh, sorry. So when you say business, because we have to break it down for some people. So DBA, LLC, and you have 2 types of LLCs, or I just bake cookies on the side, but I make money, so this is my side business.
So here's what I'll tell you. So if you're talking about business formation and business classification, you definitely want to get with somebody that's going to steer you right. But I'm a big believer in this. I'm a big believer in getting out there, making a mess, sloppy it up, and then have somebody like me help you to clean it up. Because too many times I've seen people get the business cards, they've got the website, they've got the LLC, but they can't sell and they never make any money. Okay? Go prove to yourself that you really want to be in real estate. Make a couple of deals first. We can backdate it 6 months because the IRS always give you a 6-month look back period to claw back those expenses and get them on your profit and loss statement. So I'm a big believer is go out and do the work. And if you do the work, we can always help you to find the right structure for yourself. Now, if you're already in business and you're starting something new and you know what you're doing, I mean, literally the LLC is the way to go for small business. Limited liability corporation, LLC. It gives you the best flexibility out there. And then you definitely want to decide if you want to be an S Corp or not. And that simply means you're taxed a certain way. Get with your CPA or whomever to help you find the best thing for you. I do a lot of realtors. I recommend to my realtors, get your LLC, and let's get you an S Corp, and let's get your taxes under control. Because if you make $150,000 as a realtor, Sam is coming for about $20-something thousand just in self-employment tax before you get into federal taxes. And that's a whole other conversation.
Yes.
Edison, I'll be calling.
Melanie, you do your little dimension.
I have realtors that are making $300,000, $400,000, $500,000 a year
Yeah.
And you need to get your self-employment tax under control. Otherwise, you're just
You're gonna
You're doing it all to Uncle Sam.
Yeah.
Yep.
So
This
figure
is-
out what percentage of that home office is that area in your home that you're using as a home office.
Mhm.
Calculate it, and then you need to make sure you leverage that tax benefit.
Right.
I have one more question.
Sure.
I'm not gonna ask too much.
No.
What system would you, because you're saying, it's good to keep track of the things that you're doing, but what systems can we put in place to make sure that we're writing off or we know what to keep? Because I'm a person who, I'm gonna keep everything.
Me too.
Here's what we don't like. We don't like when a new client comes to us and they have a shoebox that has been on the shelf with all those little paper receipts, and next thing you know, a cockroach pops out and just kind of scares us because it's been sitting there for a while. True story. Okay, that's a true story, okay? I have the easiest thing for you guys. One or two things. You can have a dedicated checking account or a dedicated credit card and just pay everything that relates to your business from that checking account or credit card. And if you give us those statements, everything is there. And if you bought something from Office Depot, we know it might be supplies. If you bought something from FedEx, then it might be shipping. And then we can put them in the right categories. If all your super fees are on there, all your MLS fees that you're paying on there, we can pull them off and help you create what we call a profit and loss at the end of the year to see how much you made from your 1099 against all of your expenses and get you down to a net. But if you buy stuff from your checking account, and in your checking account, you have McDonald's, you have all the other personal stuff that you have in there, it's going to be tough to decipher. And the IRS wants you to have a delineation between your business expenses and your personal expenses. You have to have that wall. Otherwise, it can disqualify you from getting your business expenses counted.
Does that still work for home ownerships? Because what if I'm trying to buy a house for $300,000 and I'm doing a profit and loss, but you know how usually when you want to show them more money, the better. So would that benefit for us for first time homeowners?
So I think what you're saying is if you made $100,000 on your 1099 and you write off $50,000 in expenses, then your buying power is only $50,000. Is that what you're saying?
Yes. Okay.
So there are certain expenses that can be added back, like depreciation, like mileage.
Okay.
If you have taken those expenses or those deductions, you can actually add them back to your income to increase your income for qualification. Now, if you get with someone like me, we can talk about the best way to plan around that.
Okay.
So you're not eating a lot of taxes at the same time.
Gotcha.
Because if you're in business, you want to take your deductions because you incurred those expenses to get to that bottom line.
Yeah. Perfectly. Perfect.
What's the name of that app that I gave you to track your expenses?
Keeper Tax. And oh my gosh, when I tell you I love it, like it has done so much just even every night. Tonya, I saw this on this payment or this bill or whatever. Is this for real estate or is this is going to go towards your taxes? So I love it. And thank you for telling me about it too. Because it takes a lot of the guesswork out of it. Because, like we were saying, unless you have somebody like Edson, unless you have a CPA, you really have no clue what you're doing. And so this is a great help for me to even be able to streamline all the stuff and have it delineated, like Edson said. So I'll know, okay, this goes strictly for my business and this over here is strictly for personal.
Right.
Yeah, I think that'll help out a lot small businesses. And then I know for sure one of my banking institutions is Wells Fargo. And they will, give me the chart of accounts and how my money was allocated for the year. And I just go print it out. It's line items. I don't have to worry about it. Because back in the day, I had spreadsheets and like with technology nowadays, you should have a box with cockroaches in it with receipts to take it. No.
Hey,
you got make sure you get on board.
No, one thing I was going to add, a lot of times keep in mind that there are deductions out there that most people aren't aware about that could be available to them. So for example, quick example, you're a realtor right now and you're in Texas or you're in the DFW area, but twice a year you go to Oklahoma, for example, to look for your family and friends. And maybe that's $1,000 expense every time you go up there, traveling, whether you fly, rent a car, Uber, whatever. How would you like to turn that $1,000 into a tax deductible expense? We can talk about that. So that's our job. We can show you how to turn your travel into deductible travel if you're doing it the right way with an intent to make a profit. So even though you're not one of the big boys, you can still get what the big boys get if you do what the big boys do, which is not apply.
I've been doing that for years, you guys. So, I don't know if they changed the law, but I used to pay for my dry cleaning. I used to wear suits every day. My dry cleaning, and I kept me a what do you call that? A lease. I had 2 cars, one for business, one for personal. It was like living through my company, basically. So if you're making money in real estate, definitely with a home, you need to make sure you know your tax deductions because it's imperative. Because I had a meeting the other day at Papado's, and I was telling her, you're giving IRS, what's his name, Uncle Sam, all this money where you can be using some of that for your own personal benefit. That would be the deductions to reduce your, what do you call it, your taxable income. So you definitely need to leverage having a home, because I know a lot of people have small businesses right about now. I've never met so many individuals with side hustle / whatever they call them. Because they have the full-time jobs, like, hey, this is my pension, this is my foundation, and I'm gonna do this for 15, 20 years, and where I'm gonna have that security, but they're still building their businesses on the side, but they have no clue, because they view it as a side hustle. They have no clue that you're leaving a lot of money on the table with just this home office. You know, like all of my utilities are based on the percentage of my office space, a percentage of all my utilities and maintenance for my home, it's a write-off. Because I run it out of here. My cell phone bills, a percentage, if you use 50, I have 2, one for business, one for personal for that purpose, because it's very hard for me to distinguish what percentage of my phone calls were personal versus business. So go ahead.
What about, and I know we're talking about home ownership, but what about for renters? What about for renters?
If it's a home office, it's a home office.
That's what I was going to say. You can do that too, because I rented in Dallas and I'm renting here in Oklahoma City. And I do, in Dallas, I had like a small space. It was just, but in Oklahoma City, I have a totally different room.
Okay.
So that square footage is taken into account when it comes to that.
Yep. That's why you need to have a CPA on your team. Because we know our skill, our skill set. I'm real estate. You know what I'm saying? I can sell that and talk about that in my sleep and trucking. But when it comes to certain things, I try to stay in my lane. I don't file my own taxes. Just like the nonprofit, that's a whole nother world. You know what I'm saying? But I do know, and it may just because I'm blessed because I have a degree in business. You know what I'm saying? And I've been a business owner for years. And shall I say, it's been a lineage in my family. My grandfather was a business owner, so I've been hearing this stuff for years. So it's just innate. I woke up as a baby saying, "Oh, where are my taxes at?" Everyone, and I know this, everyone was not blessed, and I think that's just the teacher in me or a professor in me, where I like to give and educate those, because I do strongly feel you knew better,
you would do better.
So
no question.
People who weren't raised, you know what I'm saying, the way I was. So that's my job. They say, what do they say? That's why I need my mom on here for the scriptures. The heaviest head where the heaviest
the head to wear the crown.
There you go.
There you go. That's what I'm talking about. Too much is required, all that good stuff. Right. And that's why I continuously pour into people, because God bless me. You know what I'm saying? I figured that's my job to bless those, who are in a position, and having someone like Edson that can take it to a whole nother level, but that's his craft. Yeah, that's his skill set. That's his. He's an expert. You see those 3 letters behind his name? Right. That he's the boss man.
3 letters.
Yeah, mine is MBA. That's a master in business administration. So I have that. CPA, you can't that. Right.
I'll be happy to help. I just want to leave the people with, don't be afraid. A lot of times people are just afraid of whatever that is, the unknown. afraid to make a mistake. I mean, I tell people this is your life. Money is your life. I know people don't really want to put it that way, but I tell people all the time, if you drove to work today, drove back, went to the grocery store, and even if you didn't spend any money, your clothes are wearing out, your tires are being eaten up, you're using money every day. And so you should make it an effort to get on top of your finances. And a lot of people just shove their head in the sand. You want to get somewhat educated, but don't feel like you have to be, like, for example, if you are needing a lawyer, you don't have to learn the law to hire one. You just need to know what questions to ask. Right. And so you just need to start. And if you start little by little, over 2 or 3 years, you're going to get very comfortable with your taxes and with your finances, because I'm also a financial coach. And the other thing is, don't feel like not paying in taxes is cheating the IRS. The IRS knows what the rules are. And once again, like I said, it's a series of incentives, because they know this. If you're a realtor today and we can get you up to $100,000 or $200,000 as a realtor, guess what you then start doing? You then stop buying property, and maybe start buying Section 8. If you buy Section 8, you're helping the government out, getting housing for people that need it. And so they put that stuff in place for you to go from one level to the next, because then that contributes to society. Next thing you know, you have an assistant that's 1099 making $30,000 a year. And that might be somebody that's going to college and want a job part-time. And now you're helping that person who's going to college. Maybe she can't go full-time because she has to work 30 hours a week for you, and going to college, maybe taking 8 hours a semester. But she's getting the best of both worlds, being able to earn an income and earn a degree over 2, 4, 6 years. And then that's better for society to have somebody that's educated than somebody who has not been through that system. So there's a whole master plan behind it. I know people hate taxes, but if nobody paid it, we wouldn't have any roads. We wouldn't have any
the infrastructure
that we have. And so, I know a lot of this stuff becomes political, but we got to get past all of that and see it for what it is. And instead of just going like this, let's understand what the rules are, guys, and just play by the rules. And if you play by the rules, you'll realize, hey, you know what? There's a lot here that I can benefit from. And with somebody like me guiding you, it's straight to the top.
Here you go. You got a shout out, Makata or Makata.
Makata. What's going on, Makata?
Hey, Makata.
Hey, Makata.
That's what I'm talking about. And we're gonna close it out on that with Edison. I'm me calling you Edison like you invented some lights.
All good. I heard it all. Believe me, I heard it all.
She said Edison is the truth, you guys. So there you have it. Today we gave you a little bit of information that was very, very powerful. And next week we're going to go more in detail about those tax types of deductions. We tapped into a few of them today, but next week we're going to go a little bit more in detail. So make sure you tune in with us next week, same time, same place. Types of deductions for next week. You can see what the rest of our schedule is. What is that? First time home buyer benefits, tax benefits. And we're going to talk about all home buyers tax benefits. We're going to break it up for you. As you can see, that's the teacher in me. I like to chunk stuff. So Edson, you did a very good job. We really
thank you for inviting me.
Yes, good job.
Thank you guys.
We learned a lot too. Now we would know this already because we in real estate. We like
exactly.
No, I learned a lot, and I just told somebody, Edison, I'm gonna be calling you tomorrow.
Sounds like a plan, Melanie.
All right, you guys, it's 7:12. I'm sorry I took 12 minutes of your time, but I see a lot of you are still on here, so that's a good sign. That means you guys were enjoying what I said or what Edson was saying. With Tonya, the close out with your title.
The Bald and Bold Realtor.
Yes.
Bald and beautiful, man. Bald and beautiful, man.
Yeah.
That in there.
It's so confident with it. She's
that's what it takes the whole lot.
You want to tell us where to find you on social media?
Find me on social media at of course, the Bald and Bold Realtor, Tonya Fairbanks. I'm actually in Oklahoma City with I Love Realty. So you can actually search for me there as well. I'm also on
all the social
IG, all social media. Yeah. The Bald and Bold Realtor, Tonya Fairbanks.
Ma'am.
Awesome. Well, this is Melanie Marie, aka the Real Estate Junkie. On Facebook, you can find me as Melanie Marie, and it's MELONI. And then on Instagram is the real estate junkie _.
All right, Mr. Edson. Last
Edson Richards CPA, and just my namesake, Edson Richards on Facebook. I am on Instagram, but I'm lame. I don't really do much there. I have a Twitter account since about 2002. Not much there, but most of my traffic is on Facebook. You can message me and I'll reach back out to you. My phone number is on my Facebook page, 214-642-1391, 214-642-1391. I'm great on text. You can always text me and I'll text you back.
All right, you guys. Make
Number.
Gotta use it.
They blowing you up. They
Gotta use it.
about those student loans. Like, oh my
you might get a $10,000 shave with this new administration. Who knows? I mean, that's what they were saying, right?
What she said, you're the truth. So we're gonna close out on that. If you want some advice you can bank on, make sure you tune in with us next Wednesday, same time, same place. So you're gonna come back with us next week. The truth.
I got you.
All right. On the types of deductions. So God bless.